The key advantage is that we can get access to large-scale computer equipment and state-of-the-art, most up-to-date. That's the important thing. And it's worth tens of millions of dollars without us having to fund that capex ourselves.
Hello, you're watching Proactive. I'm joined by Paul Elliott, the CEO of Active Energy. Paul, very good morning to you. Bitdeer is a $2.6 billion Nasdaq-listed company. How did this partnership come about, and what does it say about Active Energy's platform that they wanted to work with you?
Well, obviously, Bitdeer are one of the most leading manufacturers in Bitcoin mining. And also, if you look through their RNSs, they're positioning themselves now as well into high-performance AI computers, hardware. So partnering with them is a major validation for what we're building and what our goal is. At the end of the day, it's a very, very important piece of information for us, and also a big, massive JV that we can build on the back of. It's important for them from their side in the fact that we're on the ground, we're securing live grid connections, we've got low-cost power, scalable infrastructure, and doing it all at a cost base that is significantly lower than the US and Western Europe. It's exactly what companies like Bitdeer need. They've got the hardware and the technical capability, and we've got the other side of it. Importantly, it isn't just about the Bitcoin mining. It's the same infrastructure we're building today that we can also support long-term AI workloads, GPU hosting, and high-performance compute. So therefore, we're both heading into that era now together, hopefully.
As you said, Paul, you're providing the power and the infrastructure. Bitdeer brings the mining kit. Walk us through how the profit-sharing model actually works in practice.
At its core, it's very aligned and it's a scalable model. That's the most important thing. The power side of it and the infrastructure and the operational delivery is all provided by us. Bitdeer are providing the hardware and the technical layer, whether that's, again, mining now and AI in the future. Financially, first we generate the baseline revenues by covering all of the power and the operating costs through a service agreement. So we'll basically be getting all of that based on hosting for them, basically. So there you've got a foundation going forward, generating a revenue stream that is just based purely on hosting, which is what we're about and what we need. From there, we participate in a revenue share, which is currently under negotiation. The key advantage is that we can get access to large-scale computer equipment and state-of-the-art, most up-to-date. That's the important thing. And it's worth tens of millions of dollars without us having to fund that capex ourselves. We're effectively building a compute platform. It's not just about a mining operation with recurring revenues embedded in the upside.
100 megawatts is a big target, Paul. What are the key milestones between signing this LOI and revenue actually hitting the bottom line?
Yes, it's a big number, but it's one that we've always had aspirations for. And with them behind us now, it's going to be more than just an aspiration. It's something that we can clearly deliver. Basically, the milestones are clear. Finalise the definitive agreement now, deploy the hardware, energize sites, move on into production. So, it is a matter of weeks. It's not months away again because of what we've already got in place. We're already there with our first site and the new ones coming online. It's not just a case of it's there and we've got to do everything now. It's all there ready to deploy.
Bitcoin price volatility is the obvious risk here, Paul. How have you structured the business so that Active Energy remains viable if crypto markets turn against you?
Well, we deliberately structured the business so it's resilience first, with the upside on top. Our baseline revenues, as I said, it comes from what we're providing. We're hosting, so that's the power, the infrastructure, and all of the maintenance, etc. So our core costs are covered regardless of Bitcoin price. That's what gives us a low risk profile. Secondly, we operate a low cost case. So that means that we remain competitive even in weaker market conditions where we've seen the volatility, like you say, with the Bitcoin price. The real strategic layer is this. We're not locked into a single use case. The infrastructure we're building is equally applicable to AI and HPC computing. So, where the demand is, we can just grow rapidly.
Paul, can you give investors a sense of what this could mean in terms of revenue, Bitcoin exposure, and overall upside?
Yes, certainly. Just on a high level basis, and we're going to go on purely per megawatt per annum. For us hosting, and our bread and butter income that's coming in is going to be $300,000 per megawatt per annum. So from the 12 megawatt we've already got announced, plus we've got lots more in the pipeline, you can work the math out from that, which puts us in a great strong position. We are not going to be cash burning. It's going to be a free cash flow situation from that alone. On top of that, we've got a share in the Bitcoin mined. And again, if you base this on per megawatt, we're looking at being able to mine 8.3 Bitcoins per annum per megawatt. And then obviously we've got a share on that. So that's your cream on top of the cake. And we've always put in our forecasts, etc., we've gone on a low price of $65,000 per Bitcoin. So we've already gone in at a low level on that. So we feel we've gone in and everything's going to be an upside.
Well, congratulations on this latest deal. It sounds like an exciting period ahead for the company.
No worries. Thank you very much indeed.
Paul Elliott, the CEO of Active Energy.